As a trader, you probably hear a lot about controlling your risk and risk management. What does that actually mean to your trading? Our guest today is Dave Whitmore to talk about risk management and what that means. So Dave, first of all, let's define what risk management really is.
Sure, Tim. Well, we try to think of it at E-Trade as having a variety of facets, starting with pre-trade planning, which is some of the most important aspects. For instance, using charts to understand where a stop loss point might be and where a reasonable target price is. Having an exit strategy, knowing where you'll get out, knowing how you'll get in. Second step is to understand what vehicle you're going to employ for that trade. Are you using margin? Are you using options? Are you using leveraged ETFs? All of these introduce a whole additional layer of risks. So putting it all together, it means having a strategy, knowing how you're going to enter a trade, why you're going to enter a trade, having an exit plan, including a stop point. And then there are a variety of tools that one can use to affect that. Conditional orders, for example, stop orders, trailing stops, a wide variety of tools that many individual investors aren't totally familiar with, and we try to teach those techniques.
And one of the things I hear about a lot is that you should always limit your risk on any one trade to a certain percentage of your account. Is there a recommended percentage?
Well, there's a lot of theories on this. I mean, for instance, Jim Cramer says own 5 stocks and put 20% into each one. Investors Business Daily says take an 8% stop and get out at that point. The point is that most traders, many successful traders, feel that they're only going to have winners 50 or 60% of the time, and they know they're going to be wrong at half of the time. And it's keeping those losses small and letting your profits run that's what makes successful returns for your trading.
All right, so maybe we should talk about a specific way that we could look at a chart maybe and find a place on there that would match our risk tolerance in terms of percentage of our overall account, and then maybe be, I don't know, lined up with a 50-day moving average per se or something. Is there a way to kind of combine technical analysis and my risk?
Yeah, it's a technique that we discuss at length. And the first thing to understand when you look at a trade position is to understand where support is and at what point would you deem that stock to have broken down, whether that's the moving average that's providing support or a trend line that's providing support, or even where an oversold condition might come in on an oscillator of some sort. These are points where you have to understand what is that percentage of your capital that would be lost, and does that trade then make sense for what the chart tells you could be a reasonable profit point. Making that small calculation and understanding the volatility that is bound to be there is that part of that pre-trade planning that we try to have our customers and traders understand how to plot and create a strategy.
And you mentioned volatility, so I should probably choose a market that was within my risk tolerance that's not too volatile that I'm going to constantly get stopped out because I have to put it too close, in other words, to match my risk.
One of the topics that we teach in recent stuff is understanding what beta means. And when it comes to things like exchange-traded funds, understanding the standard deviation, which is the sort of numerical expression of that volatility. And once you know that number, now you've got an understanding of how much value is at risk at any given point. Because we have to understand there's a randomness to stock price movements. All we're doing with technical analysis is getting probability on our side and believing that we've tilted the field in our favor. But we still have to understand that randomness can crop up at any time. And it's making those calculations based upon chart formations that is a big part of applying technical analysis and pre-trade strategy.
Well, just scratch the surface, but Dave, thanks for your time.
Yeah, appreciate it. Thank you.
You're watching the MoneyShow.com video network.